Okay, let's dive right into this. If you're putting together a long-term portfolio, or maybe you're just trying to wrap your head around this massive shift in tech leadership we're seeing, there is really only one theme dominating the conversation right now, and that is artificial intelligence infrastructure. Welcome to The Explainer. Today, we're taking a journey straight through the entire AI ecosystem to map out exactly where the big money is flowing, who is actually capturing it, and what all of this means for the future of computing.
So, $1.2 to $1.4 trillion. Let that sink in for a second. That is the staggeringly huge projection from Morgan Stanley for total AI infrastructure spending by the year 2027. I mean, we are quite literally witnessing the largest infrastructure expansion in human history. The stakes here are just astronomical. And to truly understand this massive build-out, well, we've got to follow the money.
Here's our roadmap for how we're going to do that. Number 1, the spending boom. 2, NVIDIA and the compute layer. 3, Broadcom and custom silicon. 4, Microsoft and monetization. And finally, number 5, putting it all together. All right, let's get moving.
Part 1. The AI spending boom. You know, the most fascinating dynamic right now is that the bottleneck for AI, it actually isn't demand. Demand is absolutely off the charts. The real bottleneck is the supply of advanced chips and the cloud infrastructure you need to actually run them. And that brings us to the hyperscalers. We're talking about massive cloud providers like Microsoft, Amazon, Alphabet, and Meta. To keep up with these mounting order backlogs, they are basically forced to pour hundreds of billions of dollars into data center buildouts. They are the primary engine funding this entire trillion-dollar trend.
Part 2. NVIDIA and the compute layer. So where does all that capital go first? Well, when we're talking about accelerated computing, NVIDIA is the undisputed heavyweight champ, and their financial growth absolutely reflects that. In their most recent reported quarter, their data center revenue hit a jaw-dropping $75.2 billion. That is a 92% jump year over year. And their guidance for the current quarter, they're pointing to an incredible $91 billion. Their CEO, Jensen Huang, actually hit the nail on the head when he called this the largest infrastructure expansion in human history. But how do they actually sustain a pace like this? Well, the secret lies in their super aggressive transition from their current Blackwell platform to the next-generation Vera Rubin architecture. And this isn't just a hopeful projection. It's completely de-risked by an estimated order backlog that stretches all the way into 2026. Now, I know what you might be thinking. A market cap sitting around $5 trillion? That sounds wildly expensive. But here's the crazy part. Their valuation multiple has actually compressed relative to its massive growth. We're looking at a forward PE in the low 20s and a PEG ratio of 0.4 to 0.6, which essentially means it's trading at a pretty deep discount relative to that massive 40 to 50% growth trajectory they're on into 2027. They've even introduced a $1 annual dividend now, which leaves plenty of room for future increases as their free cash flow just continues to expand. But that begs a really important question, right? What actually connects all of these massive, discrete GPUs together? And how do hyperscalers optimize for their own highly specific proprietary workloads? Let's move a step up the value chain and see how this all connects.
Part 3. Broadcom and custom AI silicon.
While NVIDIA absolutely dominates general compute, Broadcom is playing this completely critical role behind the scenes. They provide custom AI accelerators. You'll often hear these called ASICs or XPUs, and the high-performance networking that ties the whole data center together. The acceleration we're seeing here is just stunning. Broadcom's AI semiconductor revenue hit $10.8 billion recently, which is up 143% year over year. But get this, they're guiding for roughly $16 billion next quarter, pushing that growth rate to over 200%.
What's truly wild about this is Broadcom's reiterated target of doing more than $100 billion in AI revenue by 2027. How on earth do you de-risk a future number that massive? You do it through ironclad, multi-gigawatt supply agreements with heavyweights like Google, OpenAI, and Meta. Right now, their bookings are substantially exceeding their shipments, giving them incredible visibility into the long term.
From a valuation perspective, they're sitting pretty nicely with a forward PE in the low to mid-20s and a PEG ratio below 0.5. Plus, they boast this remarkably strong track record of over a decade of consistent dividend increases. Right now, they're paying around $2.60. And they're pulling all of this off while maintaining adjusted EBITDA margins in the high 60% range. Just incredibly efficient. Okay, so we've seen the hardware. We know exactly where the chips are coming from. But how is all this massive, unbelievably expensive compute power actually monetized at the very end of the line? Let's pivot to the final layer of our journey.
Part 4. Microsoft and the monetization layer.
$678 billion. Look, Microsoft is obviously one of the largest buyers of the exact silicon we were just talking about, sure, but they capture a massive share of the economic value downstream through software, things like Azure and Microsoft 365 Copilot. That $678 billion represents their contracted future revenue. It's an 80% year-over-year jump that gives them highly unusual revenue visibility for a company of this size.
A massive driver for all of this is Azure, which has now officially surpassed $100 billion in annual revenue out of the total company revenue of about $331 to $332 billion. Azure is seeing this accelerating mid-40% year-over-year growth. And crucially, to improve their own efficiency and protect those margins, Microsoft is also aggressively developing its own internal silicon now.
From a valuation standpoint, Microsoft gives you a really nice balanced risk profile. You're looking at a forward PEP in the mid-20s with EPS growth projecting in the mid-teens to low 20% range. They also offer a solid $3.64 dividend, and that is backed by over 20 consecutive years of increases. And with management making it very clear that capacity constraints are expected to persist through at least 2026, their long-term revenue visibility is just rock solid.
Part 5. Putting it all together. We have literally traced the cash all the way from raw GPUs down to custom networking and finally over to cloud monetization. Looking at these three side by side really shows how they offer this beautiful complementary exposure across the entire value chain. NVIDIA gives you the pure compute, Broadcom provides the networking, and Microsoft captures that end-user software value. What's fantastic here is that all three are currently trading at relatively reasonable forward PE premiums in the low to mid-20s, and all three provide a dividend yield, adding that nice little layer of capital return.
But look, we have to be completely objective here. There are very real risks to this whole thesis. If hyperscalers' capital expenditure suddenly decelerates, this entire value chain is going to feel the pain. We also have to keep a very close eye on geopolitical restrictions, particularly involving China, because that can disrupt semiconductor sales practically overnight. Plus, the competition in custom silicon and cloud is just incredibly intense, and flawless execution on these next-generation product ramps is never a sure thing. Share prices for these highly complex businesses can be extremely volatile, and to be super clear, this explainer is absolutely not financial advice.
So I'm going to leave you with this final thought. As the greatest infrastructure build-out in human history unfolds right in front of our eyes, which layer of this AI value chain will ultimately prove to be the most resilient? It's a genuinely fascinating question to chew on as you do your own due diligence. If this explainer helped map things out for you today, keep exploring, keep learning, and keep asking those great questions. Thanks so much for joining me, and I'll catch you on the next one.